Great. So today we'll be discussing stakeholder capitalism. Sounds like a mouthful, but we will explain to you shortly what that means to each and every one of us. Let's start off with a quick round of introductions. Maybe I'll go ahead first, and then you guys can take it away. My name is Nikita Sachdev. I'm the CEO and founder of Luna Media Corporation. Our bread and butter is Luna PR. By the way, nothing to do with Luna Terra. The name came first. We're headquartered here in Dubai with offices in London, New York, and Singapore. And it's a pleasure to be here today with some fantastic panelists. Why don't you guys go ahead and start with some introductions?
Yes, my name is Angel Versetti. I lead Versetti Family Office. We're a crypto-native family office. We have invested in a number of coins, most notably Dogecoin, which we did a turnaround on as an activist investor between 2020 and 2021. And I'm happy to talk about all the developments in crypto here. Thank you.
Sorry, I got distracted by amazing music coming from somewhere. Hello, everyone. My name is Kavita Gupta. I'm the founder and GP for Delta Blockchain Fund, which I started back in 21. We have our first fund is a pre-seed, seed stage fund, $100 million, investing in companies like First Check and Polygon, Starkware, Anchorage, OpenSea, etc., etc. And the second fund is a liquid token fund.
Hi, everyone. My name is Lucy Gazmararian. I run an early stage crypto VC, which I set up in Hong Kong in 2021. Recently expanded operations to Abu Dhabi. So I'm sort of part of the local fabric, which is very exciting. Setting up in ADGM. I think what sets Token Bay Capital apart is we've taken a regulated approach, so regulated venture fund manager, and really working with very forward-thinking regulators in both Hong Kong and now Abu Dhabi. So thrilled to be here.
Hi, everyone. My name is Robby Young. I run investments for a company called Animoca Brands. We're one of the most active investors across the Web3 space. Mostly on the early stage side, we invest both through a venture fund as well as off our own balance sheet strategically. We have a portfolio of about 520 companies now, and that includes everything from infrastructure to DeFi to entertainment like gaming and art and music, etc. Most importantly, if it's in Web3 and has a token, we're interested.
Awesome. Thank you, guys. So earlier in the speakers lounge, we were discussing what even stakeholder capitalism is. And it was very interesting that we may all have different definitions of what exactly it is. Personally, when I was doing research on this panel, I thought it was a very interesting concept, almost revolutionizing the way we see traditional capitalism. So why don't we start off with an introduction to what stakeholder capitalism means to you?
Okay, I'll bite on this end. So I think for us, stakeholder capitalism is really thinking about this idea of kind of an antidote to Web 2, because when we think about Web 2 being highly concentrated and highly centralized, all of the benefits of the network effects that are encapsulated in Web 2 platforms like social media platforms, streaming platforms, etc., they all accrue to the platform and their shareholders. But actually the users get very little, right? They're basically the source of data input, but they don't really benefit from those platforms or from the network effects in those platforms. But in a Web3 circumstance, you now have the opportunity for everybody involved in the project to be a stakeholder, right? You can own the token of the project. And so as a result, the benefits of those network effects are more broadly distributed, not just to the platform and their shareholders, but also to the people building on that platform or the people who are the consumers of that platform.
Yeah, I wonder how the definitions are going to evolve. So stakeholder capitalism, I like to sort of position it versus the equity market. So typically investors in equity markets, you invest in a stock you like, and you're basically having a claim to that company's future earnings. And you sit back and you relax and you wait for the stock to go up. Not so in Web3. Now the mechanism by which you invest in a company is actually through a token that's on a blockchain. And with that token, you now have access to the inner workings of a company. Everything is transparent, immutable, and that really extends to a number of different activities that becomes incumbent upon the investor to be an active investor and actually have a stake through their actions. So this is where Web3 and the Web3 economy is getting really exciting. And you kind of have to roll your sleeves up. So examples of how you get involved through the mechanism of a token is through voting. So there are decentralized autonomous organizations, so it's a voting mechanism. There's also an ability to sort of add to the security of a network through staking tokens, or providing liquidity in many of the different decentralized finance protocols. So actually the role of an investor in Web3 is much more of an active one. You're kind of an operator alongside your founders. So I would say it's really giving rise to a new generation of investment.
I think you already captured a big piece of like what is or who is stakeholder for the stakeholder capitalism. I feel like those two terminologies together, from whatever my traditional background from World Bank and IFC, does not add up together when it comes to the Web3 world. Because the whole idea when the whole revolution of the Web3 back in 13, 14 started was the fractionalization ownership. And I feel like there is not much capitalistic part of very individual stakeholders owning it. The way I look at it, any connection to this world, particularly in the Web3 world, is actually anyone who owns any piece of token or any piece of the nodes or whatever from infrastructure to consumer app is basically a stakeholder and owner or a fractional owner of that platform. And that is what's the beauty of the whole Web3, that you could have one token out of the 10 million tokens minted, but you have the equal right to go and actually vote or to basically be the part of the community and raise out questions and have the profit associated with it. So for me, I'm not sure if stakeholder capitalism, that exact word, work for Web3, but definitely stakeholding in a fractional world works for me.
Yes, in our view, there are two kinds of stakeholders primarily in crypto. So these are token holders for most obvious reasons. That's the most direct form of participation in a protocol. And then it could be node operators, which may or may not require owning tokens. Obviously, in proof of work, you don't have to own tokens to run your own nodes. In some other protocols, you need to stake some tokens, but people provide some other kind of value or service to the network, primarily security and compute power. So from that perspective, you know, in my opinion, the protocols that are focused on those two areas, economic security and processing of networks, these are the interesting elements of stakeholder capitalism that crypto offers that is very different from all other TradFi aspects.
Thank you. I think it was very interesting to get each and everyone's take on this. And Angel, thank you for your take on the two different type of stakeholders, because I was just about to ask my next question. Is it only the value, is it only monetary based? Because, and I guess you answered that, because I guess there's so many other ways that you can add value through your skill set, expertise, through your time and efforts. And so maybe that will bring me to my next question. In the sense of gamers and content creators, I mean, they add a lot of value in maybe perhaps non-monetary sense. So Robby, Animoca is a leader in digital ownerships. So how does stakeholder capitalism empower gamers and creators?
Sure. I think this goes back to actually one of the points that Lucy was making, which is it's being a stakeholder in a network can be very much an active thing because there's a participatory aspect to it. You can be, you can hold tokens and just not do anything and hope for a return. But at the same time, tokens can encapsulate other things. They can encapsulate your decentralized identity and your reputation. They can encapsulate voting power, and voting power is a big deal. So particularly in the gaming ecosystem, lots of games are thinking about how we can involve our community in aspects of play and aspects of, team collaboration by taking sort of voting and power stakes in it. So we have one project that is quite well known called the Sandbox, and we've made it quite public that part of the long-term transition of the Sandbox is that we've created a Sandbox DAO, and that this DAO will eventually assume the leadership role in determining the future of that community. But for us, it's a process because obviously, the road to democracy is very, very long and windy and hard fought. And it takes a while because you can't just hand it over to the community on day one. You need to wait for emergent leaders to manifest themselves and see who's appropriate and build a DAO over time. But definitely it's a way for people to be really active and participate in the ecosystem that they're a part of.
And it empowers users. It gives them a sense of ownership. However, with ownership comes responsibility. I sound like a Spider-Man movie.
100%.
With ownership comes responsibility. Do you believe the users today, they understand the implications of this?
I think some of them do and some of them don't. I mean, in the same way that we as citizens don't always, understand what we're voting for. It depends on the individual to take it upon themselves to inform themselves. We as founders of projects try to inform through social media and tutorials and influencers, et cetera, to try to educate people because, and I think you see great examples of these out in the community with projects that have been around for a while. So, we're quite closely involved in the ApeCoin DAO, for example. And the ApeCoin community has been passionately voting on stuff on a weekly basis for years now. And it was rocky at first, and over time, leaders emerged from the community, and it's a much more organized and kind of, bureaucratic, not bureaucratic in the positive sense, process. It's much more mechanical now than before because they've gotten accustomed to it.
For sure. And I think when we talked about the implications and you compared it to the real world, I guess that's also where regulation comes in, which is a topic that we can go on later if we have time. But Lucy, from an investor standpoint, how will stakeholder capitalism transform the investor and founder relationship?
Yeah, I think I maybe jumped ahead and sort of explained a bit of this new dynamic, new investor-founder dynamic that Web3 has really given us in our intro. But it's right, there is so much more that you can bring to the table now as a venture capital investor. And I think, while we're still experimenting with the extent of decentralization, with how efficient these DAOs or decentralized autonomous organizations are, it's like we've got the seeds of the ideas of how this whole Web3 economy is going to sort of pan out, but we're not really there yet. So it's not sort of, you can get stuck in and, voting is maybe not as meaningful. ApeCoin, it's good to know that they've got a high participation rate. But I would say that the majority of chains and projects, of which there are tens of thousands, really struggle to get that sort of engagement from users. And actually, that's been a topic very much so when you compare this cycle to the last cycle, which was very much a DeFi cycle. Investors were very engaged with voting on and investors when it was how you're going to get yield, how the yield is sustainable, what you're actually doing to sort of make money in these new decentralized applications. Whereas this time around, we're sort of lacking that money-making aspect. So we're all being very puritanical, and what is the right approach to how do we engage? What's the path to get the right outcome and actually build the best Web3 economy? I think there's going to be a catalyst, and I think everyone's going to sort of focus more on this. But as it stands today, as investors, we're ready and waiting, definitely with voting. I do get involved with protocols on the voting side. But a lot of projects are just starting out, and actually many projects haven't even launched their token yet. So every project's at really different stages. So it's a very varied new environment that we're all sort of figuring out together. But I think what's exciting is where it's all headed. And I don't want to talk about AI because I think it's talked about a lot, but I think the combination of AI to these processes and to this building out of these network states and how they're going to assist investors such as Token Bay is going to be really exciting because that's going to accelerate moving this space forward and having AI agents that can sort of pick up the slack when other users are less engaged. So I think it's going to evolve in a pretty interesting way.
I think you're right. Like, come to think about it, the dynamic has changed a little bit this market. I remember last bull run, everybody was staking. There was a play to earn craze, and it seems like the kind of user engagement has kind of died down. Maybe I don't want to say died down, but what do you think it is? Is it like a market cycle, or do you think we just need to try something new now?
I mean, this might be a nice segue to another question, but meme coins is actually the space that's getting the most user attention. I'm actually not too familiar with what you put forward in terms of voting to your users on meme coins and dog coins and cat coins, but actually that's where a lot of the activity is. I mean, Robby, you probably see more of really what are the topics that are drawing in the most engagement, but definitely from a user perspective, it's meme coins that's getting a lot of mindshare right now, which maybe other panelists will say that that's a good thing, depending on your viewpoint.
The only thing I can tell you is that our research shows that dog-themed meme coins produce better returns than cat-themed meme coins. That's a fact.
But I think I just want to quickly add that also the one which you were asking about, people were doing a lot of play to earn or walk to earn and run to earn and all those earn economy people. Actually, there's a lot of DeFi activity happening with liquid restaking. We suddenly saw EtherFi, Renzo, Kelp, like bunch of really big projects going with 30 billion, 20 billion, like really crazy amount of TVL, like EtherFi still continuing to have one, Jito and Solana, we saw suddenly a lot of MEV and restaking all combined together. So I do feel like that and now I'm seeing high frequency trading on top of meme coins. Really? Which is like, seems like the next big degen play. Meme coins are just not enough. The dog also has to be AI driven and has to earn money, you know.
And we also see meme coin collections launching their own NFT collections.
Yes. Yeah, meme coins, I mean, once you have the community, they continue to grow and expand off of that. While we're on the topic of meme coins, let's discuss this a little bit. Personally, I'm a massive meme coin degen at heart, as I was telling you guys earlier. And I think that there's nothing stronger than a meme coin community. I think that's what drives so much growth in meme coins. Angel, you're with Doge.org. Doge is the largest meme coin out there. What do you think other companies can learn from meme coins in terms of stakeholder capitalism?
Yeah, I think it follows nicely from the previous comments about why people stopped engaging with other play to earn, stake it, and do it whatever is, if you hit a monkey with electricity enough times, the monkey will run away from the game. So too many people got burned playing with those games and realized actually they can do something either more productive or completely stupid, which in my opinion led to the rise of meme coins. Dogecoin was the original meme coin, and we made a massive bet. Thankfully, I'm not a VC fund. I manage my own money, so we made a degen bet on Dogecoin, believing in it religiously. But it was a monopoly on meme coins, and it was a response to this, nothing makes sense markets. The game is rigged against you. You might as well go on the dumbest thing out there in the market, which was Dogecoin. The interesting thing is that it actually spurred a whole industry of this, I call it like financial nihilism, as in like, we don't believe in anything, let's just meme it. And I'm not sure, whether other companies should learn too much from meme coins, because the world is already crazy enough. We already have too many clowns and idiots running companies. If it becomes more like meme coins, I think we'll need Elon to come up with spaceships quicker so that we could leave this planet. But the interesting thing is, of course, the meme coins are a response to this the game is rigged thing, where a lot of VCs were entering deals on top of many other insiders. So you first have the founders, then the KOLs, then the advisors, then the partners, then the exchanges, then the launchpads, then market makers, then VCs. All of these want to dump on someone. Who is it they're going to dump on? The retail. The retail, even if they're retail, they will still, like I said, you hit the monkey with electricity enough times, the monkey will learn, and retail are obviously people, and therefore they have learned, and actually, if the game is rigged, we'll just create our own casino. So a meme coin is like a mini casino that the community can own, and in some crazy way, it's fairer, and that's why it's so popular. People feel it gives them a greater chance. So, that's a response to the current conditions, but I'm just thinking it shows how broken our current broad system is, and crypto system in particular. So I really wish we would go back to the origins of crypto, where people were making intelligent proposals, had a vision, and really cared about decentralization, censorship resistance, disintermediation, the core values for why Bitcoin was created, for why Ethereum came out with their smart contracts. I really wish people would kind of go back to those more intelligent discussions whilst having the religious element of meme coins. But like, we should still think about value and creating something valuable.
I think that also semi-answered my next question to you, which was, I guess, with the massive community that now Dogecoin has or other meme coins may have, I think there's a massive responsibility that they have to the community. They're a reflection of the crypto space at this point. So how do you balance between the playful engagement and serious responsibility?
Well, that's a very fine line to walk. So I think you do see some coins like Shiba, for instance, the biggest and most obvious competitor to Dogecoin. Yeah, they realized actually, let's try and invest some money into some real technologies. So they partnered with a bunch of different stakeholders, most recently with Zama, who provide FHE, fully homomorphic encryption, which I think is a promising area of research. And yeah, they did put some money to make a blockchain that would, solve some issues. So that could be one way, is like, okay, it's kind of like SPACs in a way. We raised a bunch of money, let's find something to acquire with that money. So that's a very obvious thing to do, but it, in my opinion, kind of repeats all the fallacies of ICOs, where people would also raise a bunch of money and then run around not knowing what to do with all that money. But that could be one answer. The other answer is it's not sustainable, but just doing something of a good social cause or charity, etc. Which Dogecoin, why is it Doge? Doge is do only good every day. That's what Doge stands for. Most people forgot about it, and it's good to be reminded about it. So it was actually a charity coin for many years, where people would play with it and donate for good cause. But meme coins have been used for that. But I still feel it's a bit like, washing your coin of all the sins. Like, oh, we've, launched this pump and dump, but let's give something to charity to make us look nice. But, we can only do it so far. But yeah, they could learn about definitely engaging the community, being unorthodox, being creative and unique, and thinking about community incentives. But at the same time, yeah, like I said, it would be nice if we could still look at the core values of crypto as the alternative system for ownership of finance, for storing and sharing data, and for expressing your opinion in a democratic way. I think these are the values that all crypto people should come back to and think really hard about.
For sure. I think earlier you discussed that everybody wants to dump on somebody, and then you discussed meme coins coming out and kind of, I guess, having a charitable component just for the sake of it. I think ethics is a very important component with stakeholder capitalism, especially earlier when we were talking about the responsibilities that come along. With decentralization, I mean, Kavita, how do you assess whether founders have the best, the best approach and have the best morals?
I think as an investor, and especially as an early stage investor, you are actually investing in founders. Ideas can get pivoted, lot of difficulties. Even if somebody comes and promises you, we're going to be decentralized day zero on the infrastructure side, that's actually not even possible practically. You cannot run like with a $1 million raise or a $3 million raise at the seed stage, like completely like 100 of nodes. You first want to get the product and then run 4 nodes, 5 nodes. But I think the ethos of decentralization and judging a character if you are going in a Series A round in that investor is, are they already running at least 15 nodes? How does the voting system already in place, even if it's just founders or the team itself, to keep it decentralization and the pathway to it? The second thing, and I'm connecting it but digressing it a little bit back to something he said, I think I saw the similar meme coin community during the whole NFT coming to raise and becoming a multi-billion-dollar value, that it was all called upon community, community, community. And as soon as the liquidity went away, that community didn't continue in all these years of bear cycle. So I am very fascinated with the meme coin world. First of all, most of these meme coins are really not that decentralized. When we are talking about the world of decentralization, yes, there is a community, but there are still 2 or 3 founders. They can show you the multi-sig, which is maximum going to be 2 or 3 signers. But beyond that, what is the idea of decentralization there? Even if you're doing liquidity pools, you can crowdsource it on Solana, but on the Ethereum side, it's basically liquidity providers coming, earning LP fee, pretty much running the whole DeFi mechanism out there. So I feel like when we talk about decentralization in Web3, which is a very important topic, I have seen projects raising all the way from pre-seed to Series A, launching their tokens and not going decentralization at all. And I think that is something which as VC, we should start asking them to be accountable for, or market makers at the last step, or the liquidity providers, even as the last step if needed, that if you are not decentralized, if you don't have minimum 30 nodes or like 40 people managing it, then you should not be on mainnet and you should not have tokens out there.
For sure. So how do you prevent these massive whales coming in and dominating the space? And how do you prevent them from dumping from the smaller retail investors?
You know, it's a tough one because the ecosystem is that as a founder, I want those whales to come. So I am actually sitting there with bait to attract them, if that's a terminology we can use. Because without the liquidity, if you're a retail customer, it's a very interesting chicken and egg situation, because if you're a retail customer and there is a very fascinating product, but it does not have its TVL, it does not have a really good liquidity there, it won't even cross your path, even if you have a lot of marketing. You would feel like, oh, it's a good PR, but there's no real insider people interested in it. So you have to go to those whales and you have to go to those liquidity providers and ask them to test your system and show confidence in your product. Once you do that, all of them wants much better rates than retail, right? So the only way I look through it is asking our own VC community, let's not do $100 million valuation pre-seed and seed round, so that all the way when the founders actually go to retail, it's like $3 billion and there is nobody ready to buy it. I think we'll have to go back to the basics, something which he referred to, that let's go back to the basics, let's do right valuations all the way to tokens, let's launch in the market in a way that along with your market makers and whales, your retail customers also buy on the power of valuation, on the power of technology, and on the power of community, which will there at least for 3 to 5 years.
For sure. I think, yeah, Robby.
I was going to say, I think this is also where you can really see a role for institutional support, because I think when it comes to launching projects, there needs to be a balance between both retail and founder team, but also institutional support, because founders should be thinking about how they leverage the value of that institutional support to have long-term holders and long-term backers who buy into a 3-year, 4-year plan, 5-year plan for where your project is going, and so therefore are perfectly comfortable to lock up for 12 or 24 months and take a big stake in the network because they believe in the vision and will share that and support you on that journey.
Definitely.
Yeah, but that's another, just for a second, you know, Robby, one of the new debates, which at least I have been observing or have been part of it, is for the early stage investors. If you are already in a project 3 years before, and now you have another 1 year after TGE when everyone have participated, is that the right incentive to have capital at early stage? And I feel like I'm definitely not rooting as a structured fund for like no lockups and let's dump everybody in the first 3 days of launching a token, but also having 24 months lockups and then 3 months for institutions. Like this disbalance is also getting a lot of retail customers completely being out and early stage investors at the same time.
Totally agree, and I think you've highlighted, I guess, the complexity of doing it right. There's no sort of one-size-fits-all solution, and that's one of the reasons why with our portfolio companies, we spend a lot of time hand-holding them through this process, because getting that mix of token holders right at TGE and all the lockups and everything is definitely both art and science, because you want to respect the early investors. You know, they need to have liquidity at some point, and you can't just say, oh, well, lock up for 2 more years because we all are. But there needs to be a plan, and as long as I think everybody's aligned around a sensible plan, at least you prevent surprises, because the surprises are actually what cause the difficulties often.
We need to start questioning the KOL advisor and market maker token lockups.
For sure. I think valuation is important, raising within your needs is important, vesting is important, and a sensible plan. It's all very important. I think really quick, in a nutshell, stakeholder capitalism gives everybody kind of a right to contribute and help make decisions. but at the same time, that might hamper decision-making from actually being, I guess, progressive or being efficient. So how do users or founders rather balance that?
I mean, I think it can be more than just lack of efficiency. It can actually be dangerous if there's not engagement and there's certain rules that are coded into the smart contracts. You can have unforeseen outcomes with automated trades or automated voting decisions if there's a lack of engagement. So actually, there's a risk with this new emerging decentralized autonomous organizations that the lack of user engagement can really be at the detriment of a project. So again, I think it's all going to evolve. I mean, DAOs have only been around probably 3 years, and if past history or these last few years are anything to go by, they are going to be the new corporate structure of the future. So this idea of traditional corporations on national stock markets are likely to be a legacy vehicle entity, and we're going to move to this more engaged blockchain-based type of organization, because within organizations, more and more is going to be automated, more and more is going to go on chain, and that's sort of the direction of travel. So I think we're all going to have to get comfortable. So if you look at it from that perspective, we're actually at the start of the experimentation journey with how to organize individuals anonymously on blockchain networks, and how do we work together to get the best outcomes, the best run protocols, they're no longer called companies, and what's that going to look like. So it's entirely natural that we are going through the growing pains right now. And, that's just part of the process.
Amazing. Thank you so much. I think we've run out of time, but I hope you guys enjoyed this panel and understood what stakeholder capitalism is. If you still don't know what it was, speak to Robby, because he suggested the topic. Thank you very much.
Thank you.